What we learned, Simon, is that China did not fall into the sea, that the U.S. economy, particularly the consumers, doing okay. The Fed may actually raise rates, verifying the fact that the economy is entering a more normal zone, the whole beginning of the normalization process. So the world didn't end after the August decline, is I think what we're learning here. Now, the rise in the market's been faster than a lot of us thought.
And where does that take us? In essence, have we stolen the rally from November, December, or is this the healing of what happened in August?
I'm going to talk out of both sides of my mouth. I think some of both. The 1867 low on the S&P 500, obviously so far is held. We think that was the low. And we had talked about the high end of a trading range, 2050 to 2100. We're smack in the middle of that. So it's some healing, but I think it's also taking some of the year-end rally in advance.
I think the data will generally look okay for the month of October and November, and that in those circumstances, the Fed probably does do the first hike at the December meeting. Friday, I think we have the payrolls up 185,000, and think the unemployment rate fell a tick from 5.1 to 5.0%. And throughout all this period, when there's been worries about an economic slowdown, let's keep in mind that your unemployment claims, your layoffs remain very low. This is telling me that the labor market's still doing okay, and okay enough probably for the Fed to raise rates at that December meeting. And by the way, in terms of the market's reaction, a lot of it is going to depend on how the Fed packages it. They're going to package this, if they raise rates, is something that is much slower than normal in terms of a tightening path that will continue to be data dependent. So I think the Fed statement could take some of the sting off of a rate hike in December.
As for whether there are too many mergers, I don't think so. About consolidation, we see waxes. You see this cycle kind of wax and wane. You see HP. You guys were talking about that a few minutes ago. Okay, now it's dividing itself, and demergers, as they call them in England, are occurring just as often as new mergers. I mean, split-ups and spin-offs, which of course are a thrust of activism, are occurring at a very high rate right now. So you have as many demergers as you have new consolidation. And I think the net of it is not more, giganticism. But this is a little bit like saying too many people are trading stocks, or, too many people are watching ESPN or something. I mean, this is part of the world we live in, and I don't think too many mergers is really a core problem, and I don't think it's a big contributor to inequality. Could you argue it's a little one? Maybe.